Welcome to PM Express. The debt action program, the deadline expired last Friday. Government, as we speak, and the officials of the finance ministry, they are auditing the numbers, trying to get to a particular number. We'll tell the number very shortly. But the big question that we need to be asking, now that the debt action program appears to be over, and I use the word appears very carefully, because until we hear a formal announcement from the finance ministry, tomorrow is supposed to be the day for settlement of this particular debt action program. And until we hear that, we can't be too certain. And so we wait for that. But we can safely assume now we haven't had an extension. So it presupposes, based on previous experience since the debt action was first launched, that the finance ministry is approaching this with a measure of confidence. But so we need to be asking the what next questions. And one of the central questions that we need to ask tonight is, can the financial sector survive the debt action program? Because even ahead of the official announcement, sources within the finance ministry have told us that they've hit the magic number. The magic number is 80. 80% is what they were looking for. 80% participation. All bondholders, they were expecting at least 80% of them to have subscribed to the debt action program for it to be successful. So this number is a very crucial number. If they miss this target, the debt action program would have been deemed unsuccessful. If it is unsuccessful, we are unable to move to the next step, which is the restructuring of our external debt. If that doesn't happen, we will miss the March IMF Executive Board sitting, and we'll miss out on that IMF Executive Board approval. If we miss the IMF Executive Board approval in March, the economy is facing a major apocalypse. Because can we stay to the next Executive Board meeting? Many economists say that will be near impossible because of the dwindling foreign exchange reserves this country is currently having to deal with. So this is a first major step that they need to cross. And the sources say they have reached the 80% subscription that they require. And so we are waiting. The next 24 hours or so, we should hear an announcement from the finance ministry that they've reached this and this is done. However, as we know, the participation have largely been as a result of these four major players. Mainly, it's the banks, the association, the Ghana Association of Bankers signed on to this, mainly them, followed by the Ghana Insurance Association, the Ghana Security Industries, and then some individual bondholders who decided, although they've been given the option to self-exempt, they still went ahead and picked up forms and signed on to the decision. So that formed the 80%. But the focus tonight is this forms the financial sector broadly. We will talk about its implications for them. Now, the deal that they went home with, these three, minus the individual bondholders, because they have a separate arrangement of 10% with a maturity of 5 years. The three above, they don't have that. What did they get? What did they sign on to? They signed on to 5% coupon for this year, right? So that's a significant hit. Many of them were holding on to coupons that were 18 and above, 18%, they're getting 5%. So that's a first hit to the financial sector. Removal of all clauses, this is a benefit for them because that was in the previous memo. Removal of all clauses in the exchange memorandum that gives the Republic the sole control in varying the terms of the exchange. And then another key thing that they got in there is a key provision of liquidity to the institutions if they need it. Now, the reason why this 15 billion is important is that the finance ministry, the Bank of Ghana, acknowledges that the financial sector, particularly the banks, will take a hit. Some of them may not survive. And so because some of them may not survive, you need to find a way to help them survive, right? And so 15 billion is made available. And it will be managed by this Bank of Ghana. And the Financial Stability Council will also advise on adverse, oversee the use of this particular fund. Our donors, our international donors are going to be helping with this particular amount. Now, this is how much they're hoping to restructure, total debt of 575 billion of debt. So this is the breakdown. So for the commercial banks, they were holding on to a total of 59.86 billion of government debt that have been restructured, right? So they were holding on to that. If you restructure this, it's going to take a big hit for their bottom line. Can they survive? We're going to have that conversation. And then we have firms and institutions owning 45.636 billion. Again, they were also asked to participate and take that hit as well. And then you have others, 25 billion. Foreign investors, they're not part of this, so we can't count them in. Pension funds, not part of it, we won't count them in. Rural banks, part of it, right? We have the insurance companies, part of it. SNIT, not part of it because they're part of the pension funds, not part of it. So you have these here facing a significant hit as a result of it, but what will be the impact on them? That is the conversation we're having tonight. In the next few days, once the finance minister comes, we're doing a lot more of this, beginning to pick the bones from what has happened and look at what next and the impact. Stay with me. When I return, my guests will join me. They are titans in the industry. They are experts in the banking area, and we'll talk to somebody who has already taken a step in trying to get one of the banks involved to give some clarity on some of the key issues involved when it comes to their trusteeship of one of the major bonds that were restructured. You want to stay with me after this, we'll get into it.